Alright traders, check this out. We got the pound versus the New Zealand dollar, and it's time for an update here, right? We've been here last week. It was about 6 or 7 days ago, and basically we've announced that we were entering a short position, going for the medium to long, looking at the medium to long term perspective. It's a big move, it's an ambitious move, and we were talking about 600-700 pip of potential profit, right? We were talking about 88.97. That's where we think the pound New Zealand dollar here is heading towards, right? And I want to give you a bit of a glimpse just to the big picture. You're already familiar with that, but I want to mention what happened here last Friday. This is the big move, guys. This is the defining moment. Now, we're talking about 95.45 as a huge support level, right? The mid-high key level. And this is a monstrous setup. Remember, we're talking about a setup that's running from 2017. That's how huge it is. And that 95.45. That's a big level, right? And we've seen price breaking below that level just a couple of weeks ago. After we've seen the reaction just a week before. I mean, price was every single time when it hit that level, it was acknowledging that 95.45. But then, of course, it came back down just a couple of weeks ago. And you know what? In the beginning of the week, when price was actually pushing higher and higher here, I specifically said I'm not too impressed by that. And we have a good feeling that price is going to come back all the way just to end the week right back below, right? So, lo and behold, that's exactly what happened. We're very pleased, of course, that that's the case. But more than that, we think that this is a huge sign that price had been successful, not only successful breaking through 95.45, but that's a mega key level. And what happened here last week basically was a reconfirmation of that breakdown, right? So we think price is more likely to continue downwards. However, guys, this is from the medium to long-term perspective. Looking at the short-term perspective, there are some upside risks right now. Now, I'm talking about that purple setup, right? Representing the very local price action. Now, what we've seen here last Friday, even though, we've seen price breaking below 95.45, from the local perspective, we've also seen a move that's been rejected by 94.35. The bottom support of that local setup, and also quite a big pullback. Take a look at this pullback. That's never a good sign, especially when it's done right across the previous low. So this is what we call a slice, right? This is slicing the previous low on the way, of course, touching base on that 94.35, bounce off that level because that's a support. And now we got price right there. I mean, right in that, on that spot of the previous low, roughly. Now, here's the issue. We think there's a good chance that price will actually enter a very narrow trading range, such as this one, right? Before it actually continues to break down. So it's going to take a bit of a break, but this break could actually be a long one, if you know what I mean. If we're going to have here a few different swings, then this could take a week or two till it's done. Now, we don't really want to stay here if that's going to be the situation, because as you can see, we have only one trade, by the way, because we took one trade out, right? We took profit on this one already, because here, and obviously, because this is what I'm saying, price could at this point turn around and head for the head for the upper section, the previous high here around the levels of 95.10. We don't want to be there if it happens. So if price is going to start to show signs of upside reversal, we're going to take out the last trade, hopefully still in profit as well. And then we will just wait for price right here on the upside, on the upper section. And when it hits that higher section here, we're going to drop the hammer, so to speak. But for now, we're tightening up that stop loss level to 97.50. That's a big change. It was 98.50, so 100 pip of adjustment to the stop loss level, tightening it up to 97.50 and keeping a close eye on price action. We want to make sure it remains below both the 95.45 and slightly above it 95.64. These two key levels have to hold in order for us to carry on with this short position and maybe even increase the position, because we think eventually we'll land at 88.97. But let's take it a step at a time. Of course, we'll be back to follow up on this one, obviously. So there you go, guys. That's about that for the pound versus the New Zealand dollar. That's about that for today. Forex Market Analytics. We'll be back tomorrow. Take care.